Welcome to my channel Stock Explorer. I am Arup Rai Choudhury and I analyze company based on various financial aspects. I have been applying my studies in stock market to test the result. Although the outcome are not always positive, I wanted to share my understanding with you and receive your feedback to further enhance my knowledge. This is my first uh, ever video I made for YouTube. Uh, you definitely give me your feedback so that I can improve upon in next episodes. You can contact me via phone or email and I would be glad to receive your call between 7 p.m. to 9 p.m. Let's begin the presentation with the name Lord Ganesh. Jai Sri Ganesh. My studies revolve around 6 pillars or criteria. Firstly, the stock should have good return on equity and return on capital employed relative to its industry. The price should be fair, indicating that price to book value ratio should not be excessively high. The company should have low debt, uh, and pledged shares, demonstrating its ability to repay debt if necessary. Although financial institution or bank may have higher debt due to their nature of their business, public holding should be minimum, ensuring strong control and ownership of the company. Both sales and net profit should exhibit quarter on quarter and year on year growth, except in cases of valid external influences like pandemic, war, emergencies or policy changes. Lastly, the business should have a low risk, meaning it should be resilient to policy changes by the government or global factors that may impact its operation. Before proceeding further, please take a moment to read the disclaimer. I would like to clarify that I am not SEBI registered or authorized stock analyst. I gather stock performance data and trend from recent company report and collect business figures from various magazines before presenting them to you. Please note that this is solely my personal study and I do not recommend you to invest based on it. Since consolidating data, conducting analysis takes a significant amount of time, I kindly request you to like, subscribe and share my channel. Your support will motivate me to bring more episodes and continue this journey. I would request you to pause here to read the disclaimer for in details. Going to the next slide, and it is a beginning of stock analysis. Today's featuring stock is Ujjivan Small Finance Bank. I encourage you to visit the bank's website to detail information about the services. In my opinion, this website is excellently designed and showcases their visionary approach and goals. Ujjivan Small Finance Bank commenced operating in February 2017 and has a subsidiary called UFSL, which is a microfinance institution. This bank offers a standard range of banking and financial services, including savings and current account, fixed deposit, recurring deposits, personal loan, business loan, housing loan and microfinance loan. Customer focus is tremendous. The bank primarily serves undeserved and unbanked section of the society such as low income individual, micro and small enterprises and women entrepreneurs. To test their services, I personally requested assistance through their portal and my experience was excellent. The representative I spoke to was a knowledgeable professional who provide accurate information. Coming back to technology driven approach, as I mentioned before, Ujjivan places emphasis on leveraging technology to enhance its services. It provides a digital banking solution including mobile banking and internet banking to its customers. Branch network. Branch has an extensive branch network across various states in India and operates through a hub and spoke model. Regulatory compliance. Ujjivan undoubtedly maintains financial and regulatory standard for its operation and customer deposit. In the next slide, I will show you the numerous IT security awards that Ujjivan has received. Ujjivan has a presence of 24 state and union territories, operates in 248 districts, has a customer base of 66 lakhs and boasts more than 629 banking touch points. They employ over 16,000 individuals. The bank has achieved several notable accolades, including Best Cybersecurity Initiative, CISO of the Year, winner of the Indian Best Association, Best IT Risks and Cybersecurity Initiative, DSCI Excellence Award for Best Security Practices in NBFC and Small Financial Institutions, BFSI Excellence Award and more. Please pause the video here to read the complete list. Ujjivan demonstrates strong long-term fundamental strength with a Tier 1 capacity adequacy ratio of 24.5%. Net interest income has grown at an annual rate of 29.8%. Net profit has grown by 62.69%. Bank achieved outstanding result in March 2023 with a 9.54% growth in interest. It has declared positive result for the last 5 consecutive quarters with the lowest gross not performing assets at 2.88% and the highest interest earned at rupees 1184.83 crores. The stock is attractively valued with a price to book value of 1.8 and PEG ratio is 0.04. The majority stakeholders are the promoters and the bank has achieved a robust profit growth of 176% CAGR over past 5 years. Bank's median sales growth for the last 10 years is 24.8%. The next slide displays a graphical representation of stocks performance over the past year. The yellow line represents the 50-day moving average and the black line represents 200-day moving average. The graph shows an overall growth trend with a 50 DMA consistently above 200 DMA after September 2022. The next slide, the following slide presents the various financial figures and ratio. The price to book value indicates that the stock is fairly valued. Stock's price to earning ratio is significantly below the industry average of 15.1 with a return of equity ROE of 39.2%. The bank demonstrates strong performance. The Piotrowski score has improved to 6, indicating the stock is a candidate for mid and long term investment. In the subsequent slide, we compare Ujjivan with its peer banks. Ujjivan holds a favorable position compared to established bank. You must have noticed that all the big banks like HDFC, ICICI, Kotak, Axis, IndusInd Bank, IDBI Bank, IDIFC, First Bank. Although the foreign institution investors holding is low, the stock has gained a interest for domestic institution investors who have been increasing their stake. The bank also boasts the highest return on capital employed, indicating the efficiency utilization of stockholders' money. The next slides display a graphical representation of revenue and profit growth since 2019. Although the bank faced challenge in 2021 and 22, its earnings have shown erosion and significant growth after maintaining 5 consecutive positive quarters. So March 2023 is a better year for Ujjivan and is a recovery year, you can say. Lastly, the shareholding pattern slide provides an overview of the trend. Please pause the video if you would like to note the detail. It is important to mention that maximum promoter holding can be 75% and Ujjivan has retained maximum within its basket. DII holding has remained consistent, while FII holding increased by 2% in June 2023, resulting in a decrease in public holding. That means stock is moved to stronger hand from weaker hand. I hope you find this analysis informative. Feel free to reach out with a question or feedback. I would be glad to answer your question. As well, I can improve myself in the subsequent presentation. As a part of concluding every stock analysis, I believe it is important to include an academic aspect. Today, I will discuss the Tier 1 capital adequacy ratio. This is very new for me also, and I am not a commerce student. However, I will try make an attempt to explain it. What is Tier 1 capital adequacy ratio or CAR? Tier 1 capital adequacy ratio CAR serves as a measure of bank's financial strength and stability. It indicates the proportion of a bank's Tier 1 capital in relation with a risk-weighted asset, which include loans, investment and other assets. In case of Ujjivan Small Finance Bank, a Tier 1 capital adequacy ratio is 24.5, means that bank's Tier 1 capital constitutes 24.5% of risk-weighted asset. This ratio reflects the bank's ability to absorb potential losses and maintain a buffer against financial risks. You can term it as a provision which every bank does it. Tier 1 capital primarily consists of a bank's core capital, which includes shareholder equity and disclosed reserves, that is provisions. It represents the most reliable and highest quality capital that a bank holds, capable of absorbing losses without necessitating the banks to cease its operation. Obviously, a higher Tier 1 capital adequacy ratio indicates a stronger financial position and greater capacity to handle financial shocks or unexpected losses. Regulators often establish minimum requirement of Tier 1 capital to ensure the bank maintains sufficient capital to safeguard the interest of the depositors and mitigate risks. It is important to note that regulatory requirement and acceptable level of Tier 1 CAR can vary across jurisdiction and may be subject to change based on prevailing economic condition and regulatory framework. By including Tier 1 capital adequacy ratio is in our analysis, we can gain insight to Ujjivan Small Finance Bank's financial stability and its ability to weather potential challenges in the banking industry. If you have any further question or need additional assistance, feel free to let me know. However, I would request if anybody from the audience who got a financial background or chartered accountant, please do comment in the comment box. I'll be glad to receive such kind of input to enhance my learning. Let's have a calculation of car. So, car basically determines the it is basically a ratio of risk weighted asset asset divided capital blocked for uh, tier 1 capital, which is blocked for reserve, divided by the risk weighted asset. In this example, I have shown that suppose a bank got 800 crores capital reserve for tier 1 capital, and risk weighted asset is 3200 crores. The calculation would be as follows: 800 crores divided by 3200 crores into 100, that is 25%. In this example, car would be 25%, indicating that bank's tier 1 capital constitutes 25% of its risk weighted asset. Please note, this is just an example, and actual value can vary different bank based on the financials and regulatory requirement. Let me conclude this presentation. Thank you. Thank you all for listening.